All right, so today we're diving into a topic that I think a lot of people find a little bit mysterious. Reverse mortgages.
Yeah, it's something that, you hear about maybe around the dinner table or late at night on TV sometime.
Exactly, those ads, right?
Yes.
But we're going to try to demystify them.
We are.
What they are, how they work, and how they could potentially play a role in your retirement.
Right, because most people, they've heard of a reverse mortgage, but they couldn't really tell you how it works or who they're right for or who they're not right for.
Totally. So let's start with the basics. What is a reverse mortgage?
Sure. So basically, a reverse mortgage is a loan.
Okay,
But instead of you making monthly payments to a lender like a regular mortgage,
right.
the lender actually makes payments to you.
Wow.
And it allows you to access the equity that you've built up in your home.
So it's like turning your home into a source of income.
Yeah, you can think of it that way. Instead of selling your home to access the equity, a reverse mortgage lets you tap into that value while still living there.
Okay, so you're essentially borrowing against the value of your home.
That's right. You're using your home's equity as collateral, just like with a traditional mortgage.
That makes sense.
Yeah.
So who is eligible for a reverse mortgage? Is it just anyone who owns a home?
Not exactly. There are a few key requirements you need to meet.
Okay, like what?
First and foremost, you need to be at least 62 years old.
60, okay.
That's kind of the magic number. You also need to own your home or have a very low mortgage balance. And of course, it needs to be your primary residence, the place you live most of the time.
So no vacation homes or rental properties.
Right. It's called a home equity conversion mortgage for a reason.
Makes sense. You're converting the equity in your primary residence.
Exactly. And there's one more important requirement. Before you can even apply for a reverse mortgage, you have to go through mandatory financial
Oh,
counseling.
that's interesting. So it's not something you can just waltz into and sign on the dotted line?
Not at all. It's a big decision, and they want to make sure you're fully informed and understand all the ins and outs before you dive in.
So it's like a safety net to make sure it's truly the right fit for you.
Exactly. They'll go over your financial situation, your goals, and make sure you've considered all the alternatives.
That's reassuring. It sounds like they've put some safeguards in place.
They have. And it's important to remember that the reverse mortgage landscape has evolved quite a bit over the years.
Oh, really? How so?
Well, in the past, there were definitely some bad actors out there. Some lenders engaged in pretty aggressive or even predatory lending practices, and unfortunately, some homeowners found themselves in over their heads.
That's never good. So what's changed? How do we know those practices are a thing of the past?
Well, a big part of it is increased regulation. The government stepped in and implemented much stricter rules and guidelines to protect homeowners and ensure those shady practices were eliminated.
So it's much more regulated now than it used to be.
Exactly. Lenders are held to higher standards, and borrowers are given more protections.
That's great news. So stricter regulations have played a key role. Were there any other significant changes that helped improve things?
Absolutely. Remember that mandatory financial counseling we talked about? That's a direct result of those reforms.
Oh, right. They really wanted to ensure that borrowers fully understood what they were signing up for.
Precisely. It's all about empowering homeowners with knowledge and protecting them from making decisions they might regret later on.
I love that. Knowledge is power. Now, let's dive into some of the nitty-gritty details about how a reverse mortgage actually works.
Sure.
When do you have to repay the loan? Is it like a ticking time bomb?
It's not like that at all. With a reverse mortgage, you don't make any monthly payments towards the loan balance.
Okay, so how does it work then?
The loan typically becomes due when you move out of the home permanently, sell the property, or if you pass away. At that point, there are a few different options for repayment.
Okay, so it's not like you have this looming deadline while you're living in your home.
Exactly. You have a good amount of flexibility and control. As long as you continue to meet the terms of the loan, such as paying your property taxes and maintaining your home, you don't have to worry about making monthly mortgage payments.
That definitely takes some of the pressure off. It's not like those traditional mortgages where you're constantly chipping away at that principal and interest.
You got it. It's a whole different approach to home ownership, especially in those later years.
I can see how that would be really appealing for some people. So we've covered eligibility and we've touched on repayment, but I think it's time to address the elephant in the room, the risks. Because let's be real, there had to be a reason reverse mortgages got a bit of a bad rap.
We're right. Reverse mortgages have had their share of controversy in the past.
Exactly. So let's talk about those potential downsides.
Mm.
What are some of the things that people should be aware of? What are the risks involved?
Well, one of the most significant risks is the potential to lose your home. I know we talked about not having to make monthly payments, but you are still responsible for paying your property taxes, homeowner's insurance, and keeping up with any necessary maintenance and repairs on the property.
Right, those responsibilities don't just magically disappear.
Exactly. And if you fail to keep up with those obligations, the lender could foreclose on your home, just like with a traditional mortgage.
That's definitely something to keep in mind. It's all about being a responsible homeowner, regardless of what type of mortgage you have.
You got it.
So, we've talked about the potential for foreclosure. Are there any other risks we should be aware of? What about the impact on your heirs? I mean, presumably you want to leave your home to your children or loved ones, right?
That's a great point, and it's something that a lot of people don't consider right away. With a reverse mortgage, your heirs will inherit the loan along with the house.
Okay, so it doesn't just disappear.
Nope. And they'll have to decide whether they want to pay off the loan, sell the property, or potentially face foreclosure themselves.
So it's definitely something to discuss with your family and make sure everyone's on the same page.
Absolutely. Communication is key.
Now, we've talked about the risks, but let's be honest, there has to be an upside too,
Mhm.
right? Otherwise, no one would even consider reverse mortgages.
Of course. There are a lot of potential advantages to reverse mortgages, too.
Okay, good. So let's flip the script and talk about those positives. What are some of the key benefits that make reverse mortgages an attractive option for some homeowners?
One of the biggest benefits is that it can provide you with tax-free cash.
Tax-free? Really?
Yes, the money you receive from a reverse mortgage is generally considered loan proceeds, not income.
Oh, that's a nice perk. So you're not getting hit with a huge tax bill when you access that equity.
Exactly. It can make a big difference, especially if you're on a fixed income in retirement.
That makes a lot of sense.
Yeah.
So tax-free cash is a huge plus.
Yeah.
What other advantages should we be aware of?
Well, another major benefit is that it allows you to stay in your home. We talked about this a little earlier, but it's worth reiterating. For many people, their home is their sanctuary. It's where they've built their lives, raised their families, and made countless memories.
It's that emotional connection to your home, right?
Absolutely. And with a reverse mortgage, you don't have to sell your home and move just to access your equity. You can tap into that value and still enjoy the comfort and familiarity of your own home.
That's huge, especially for people who are aging in place and want to maintain that sense of independence and stability.
You said it. It's all about having options and choosing what's right for you.
Exactly. And it sounds like a reverse mortgage can be a powerful tool for achieving those goals. Now, I know we've barely scratched the surface when it comes to reverse mortgages. It's a nuanced topic with a lot to unpack.
You're telling me we could talk about this for hours.
Oh, I'm sure we could. But for now, I think we've laid a good foundation for understanding the basics. We've covered a lot of ground today. We've demystified what a reverse mortgage is, who's eligible, the repayment process. We even dipped our toes into the risks and benefits. But I'm sure our listeners are eager to dive even deeper into this topic. So what are we tackling next week on our reverse mortgage adventure?
Well, next week, we're going to roll up our sleeves and dig into the different types of reverse mortgages that are out there.
Oh, so there are different flavors.
There are, and each one has its own quirks and advantages and disadvantages. We'll break it all down so you can make informed decisions about which one might be right for you.
I'm already intrigued. I can't wait to learn more.
That's right. We're talking about the home equity conversion mortgage, or HECM for short.
HECM, got it.
And it's the most popular type of reverse mortgage out there for a good reason.
Okay, so why is that? What makes HECM stand out from the crowd?
Well, for starters, HECMs are insured by the Federal Housing Administration, which most people know as the FHA.
Okay, so there's that government backing we talked about earlier.
Exactly. That FHA insurance provides an extra layer of protection for both borrowers and lenders. It basically guarantees that the lender will be repaid even if the homeowner outlives their home's value or if the housing market takes a nosedive.
Okay, so that sounds like a pretty sweet deal for both sides. No wonder they're so popular. But I'm curious about the other types of reverse mortgages out there. We've got those HECMs covered, those federally insured ones, but what else is out there?
So you also have what are called proprietary reverse mortgages.
Proprietary. Okay, so not backed by the government.
You got it. These are offered by private lenders, and they often come with higher loan limits than HECMs.
Ooh, higher loan limits.
Yeah.
That sounds enticing. Why would someone opt for a proprietary reverse mortgage over a HECM?
Well, They can be a good fit if you have a higher valued home and you need to tap into more of that equity. Maybe you've got a big renovation project in mind, or you need to cover some significant expenses.
So if you've got a luxurious mansion, a proprietary reverse mortgage might be the way to go.
You got it. Now, there's one more type of reverse mortgage that we should touch on: single purpose reverse mortgages.
Single purpose, so these must be a bit more niche.
They are. Single purpose reverse mortgages are usually offered by nonprofit organizations or even some state and local government agencies.
Okay, so they're not from those big banks you see advertising on TV.
Right. And the key difference here is that you can only use the money from a single purpose reverse mortgage for a very specific reason, which is determined by the lender.
So it's not like you're getting a blank check to use however you please. It's much more targeted.
Exactly. It could be for things like paying off your property taxes, making essential home repairs, or even covering the costs of aging in place modifications.
Okay, so if you have a very specific need related to your home, a single-purpose reverse mortgage could be an option.
Precisely. Now, before we get too far ahead of ourselves, it's important to remember that not all reverse mortgages are created equal. Each type, HECMs, proprietary, and single purpose, comes with its own set of terms, requirements, and potential benefits and drawbacks.
That's a great point. It's like shopping for a car. You wouldn't just choose the first one you see on the lot. You'd want to compare models, features, and, of course, those all-important prices.
Exactly. And it's the same with reverse mortgages. It's crucial to do your research, shop around, compare offers from different lenders, and perhaps most importantly, seek guidance from a trusted financial advisor to figure out which type of reverse mortgage, if any, might be the right fit for your individual needs and circumstances.
Absolutely. It's all about making informed decisions that align with your financial goals and your vision for retirement. So you're saying instead of taking that smaller monthly payment right away, you can use your home equity and then get those bigger checks later, and it actually is a smarter way to go about it.
It can be. And in many cases, people end up with a lot more money over the course of their retirement by delaying those Social Security benefits. But of course, it's important to crunch the numbers and make sure that strategy aligns with your overall retirement plan.
Right, because everyone's situation is unique.
Exactly.
Well, this has been incredibly insightful. I
Yeah.
feel like we've really pulled back the curtain on reverse mortgages, and I hope our listeners are feeling empowered with this knowledge. But for those who want to continue exploring this topic, what resources do you recommend?
A great place to start is the U.S. Department of Housing and Urban Development, or HUD. They
Huh.
have a ton of information on their website specifically about reverse mortgages.
Got it.
Another great resource is the National Council on Aging, or NCOA.
Okay.
They're a fantastic organization that provides a wealth of information and resources for older adults on a variety of topics, including reverse mortgages.
Fantastic. So we've got HUD, we've got the NCOA. We'll make sure to link to those in our show notes so listeners can easily find them.
Sounds great.
Well, as we wrap up today's deep dive, is there any final piece of wisdom or a key takeaway you'd like to leave our listeners with?
I think the most important thing to remember is that a reverse mortgage is just that it's a tool. And like any tool, it can be used effectively or ineffectively.
It's all about how you use it.
Exactly. So arm yourself with knowledge, do your research, talk to a trusted financial advisor, and make sure it's the right fit for your unique needs and goals.
Such great advice. It's all about making those informed decisions. Well, thank you so much for joining us today and sharing your expertise on reverse mortgages. We really appreciate you being here.
My pleasure. I always enjoy chatting with you.
And to our amazing listeners, thank you for joining us on this journey as we explore the ins and outs of reverse mortgages and everything retirement related. We'll see you next time for another deep dive.